All right, guys. We have Meta and Microsoft earnings going live after the closing bell. We got 45 minutes until that drops. Ugh. Gotta drink some caffeine. Yeah, so today we got big earnings coming out. It's been a crazy volatile day. Is the music too loud? It's kind of loud on my end, man. Seems a little loud, huh? Seems a little low on y'all's end, actually. Let me know if y'all can hear the music. There we go. What's up, K, North, Sigma, Towers, Sam? What a crazy day, honestly. We got Microsoft earnings at the close. Meta up 542s. Look at Apple here. Apple at 211s. Amazon at 182s. Google at 159s. Nvidia back up here. So what a crazy day, honestly. We started off really scary, really red. We had GDP show up negative. So GDP showed up negative. We also have we had negative GDP. We had lower than expected PCE core inflation, which is good, right? So we had some bad news, some good news. We had a really, really weak prelim payroll result. The full payrolls will drop on Friday, and we'll stream that like we always do at 8:30 in the morning on Friday Eastern Standard Time. But they showed up at 62K versus 62K versus like what? It was like 62K versus 120,000 expected. So that showed up like super weak. And now we got Meta earnings, Microsoft earnings at the closing bell, and the earnings call to accompany it. So it should be interesting. Yeah, it really should be. So I'm seeing a couple different reports about tariffs today. And I know the president also did one of his CEO roundtables. I did see that they actually streamed it. I thought it was behind closed doors, but it looks like they actually streamed it. But yeah, the U.S. has been proactively reaching out to China through various channels seeking to negotiate on tariff issues. One of their Weibo accounts affiliated with the state-run China Central Television. The post cited unidentified people with knowledge. China doesn't need to negotiate with the U.S. until the Trump administration takes meaningful moves first, it added. Tan Zhu believes that before the U.S. takes any substantial action, China has no need to talk to the U.S. However, the U.S. hopes to contact China. It will not be bad for China at this stage. China needs to observe and even force out the U.S.'s true intention and take the initiative in negotiating and fighting, according to the Weibo account. And so that dropped about an hour ago. And so that's interesting as well. Hey, what's up, Kay? What's up, William, Faye, Ryan, Anthony? Amazon pop if Meta pops? Maybe. Amazon's a different beast right now, though, to be honest. Yeah. And so let's talk about some big stuff to pay attention to during today's earnings. All right, so let's talk about the big stories to watch for today. Yeah, let's talk about it. What's up, Sigma? Up to me. Eli Lilly on deck tomorrow. Yeah, we got a lot of stuff tomorrow, too. Tomorrow we got Apple and Amazon, which Amazon is going to be incredibly interesting with all the stuff going on right now. So with Meta, there's a couple things. Revenue versus EPS consensus forecast for 41.2 billion revenue for Meta, which is up about 13% year over year, and EPS of about 521, which is up about 11% year over year. This sets the bar for top line and big profitability beats or misses. Advertising resilience. So after Google's strong ad results this quarter, or this past quarter, Meta's advertising revenue and growth margin are going to be really focused on during this earnings report, in my opinion. So again, you want to pay attention to Meta's advertising revenue and growth in margins, because Google had a really good report last week, right? Google had a great report. Now we want to pay attention to Meta's to see if they're going to be as resilient as Google has been, despite all the stuff going on in the country. This will signal whether digital ad spend is truly recovering or still under pressure, is why. Tariff commentary. So with greater than 10% tariffs of ad dollars from China-based advertisers facing U.S.-China trade tensions, tariffs are up to 145%. Listen for management's outlook on how tariffs are impacting global ad campaigns. So that's another story you want to listen to for Meta. Again, how are tariffs impacting ads and campaigns with social media? I think that's a relevant thing to pay attention to. Generative AI investments. I know Meta capped their 2025 CaPex guidance at 60 to 65 billion, and they talked about this last quarter. So watch for details from yesterday's LlamaCon, which is Llama's Meta's AI system, standalone Meta AI app, and API, and how management plans to monetize AI across its apps. And so that's a big story. Reality Labs burn rate. So Reality Labs has posted roughly 20 billion in operating losses on 2 billion in revenue. Investors are going to focus on any plans to rein in spending there or improve margins in the VR, AR, hardware, and metaverse. Threads is another aspect of Meta that you probably want to focus on as well, with Threads now boasting 320 million MAUs, which is monthly active users, with ads rolling out globally. Assess whether Threads will meaningfully contribute to near-term revenue or maintain a long-term play. In the backdrop of all this stuff, though, there is the antitrust trial. So the FTC's antitrust trial is unlikely to be talked about during the call, but ongoing litigation remains a strategic overhang that could limit future M&A and platform integration. We also want to look at outlook. Wells Fargo has an overweight, price target at 752. JP Morgan overweight at 610. Bank of America buy at 640 price target. They cite AI-driven ad improvement, cost discipline, and resilience of the core ad business. And so those are all things with Meta you want to focus on. We also have Microsoft after the closing bell today. So Microsoft, they're expecting around 68 billion, which is up 10% year over year on EPS of 321. It came in at 294 a year ago. Net income forecast at 23.94 bill. Intelligent cloud strength. You want to listen for Azure and related cloud services projected to generate about 26.13 billion, which is up almost 20% year over year, making cloud growth and margin primary drivers of overall beat or miss. You want to listen to AI monetization metrics. Investors are going to probe how much AI, Copilot, subscriptions, AI-powered analytics contributed to cloud growth, and whether usage trends are accelerating or decelerating there with AI. That's a big story for Microsoft. Enterprise spending and partner surveys, VAR surveys signal wait and see approach on non-essentials. IT projects amid tariff uncertainty. CaPex, just like Meta, like CaPex and spending on AI is important. Scrutiny on their 100 billion plus AI infrastructure spend. Tariffs may pressure this hardware costs and margins, and management's guidance on future CaPex will be key. We got security and personal computing segments with updates on security offerings, Intune, Sentinel, Defender, migration into E5 and all that stuff. And yeah, listen for outlook and guidance, of course, which are really key. Taking a look back at Meta, though, let's talk about it here. So pump and dump on earnings. I don't know, man. I think the market's weird today. I really do. I think it's a different market. It's strange market. All right, so guidance numbers for Meta. I'm going to put some of these numbers up on screen. This is what Meta said last time. Okay. Sorry, I'm trying to put this up on screen. You can see this guidance numbers for quarter one. Let me make this a little bit. I don't want to make it fully opaque. Wait, I want the background. Where's it at? There it is. Alright, so here's some of the numbers to watch. You can see Meta already said quarter one 2025 revenue guidance. The prior range, they had told investors to expect quarter one revenue of 39.5 to 41.8 billion, implied 8 to 15% year-over-year growth on a constant currency basis, about 11 to 18%. When we're talking about analysts for quarter two, right? This is one of the guidance numbers from analysts that you probably want to look at, and that's probably pretty relevant as well. Let's put this up on screen here. All right, so again, let's take a look. So here is, if you look below me in yellow right now, these are some of the quarter two analyst guidance expectations. So analysts expect Meta will guide quarter two in the range of 44 billion, 40 to 44 billion. Modest quarter-over-quarter sequential growth, but tempered by tariffs, right? So this is probably the number you want to pay attention to. Full year 2025 total expense outlook. They expect to spend between 114 and 119 billion on op expenses. Full year 25 CaPex 60 to 65 billion, and yeah, they think the model a full year tax rate of 12 to 15%. Let's take a look at the EPS and revenue graphs here for Meta. Right, so here is the EPS graph that we got for Meta, and remember, Meta is expecting here, a little bit of a contraction. Now you got to temper this a little bit because we have to look at this is the. You got to look at their last March quarter, which was 4.71 EPS, 471 EPS. They are today expecting an improvement on that at 522. So they are really expecting to go up a little bit here. They're going to probably look something like this. In terms of their next little EPS graph, if they show up, oh, let me get myself out of the way. If they show up as expected, they're probably going to look something like this right here, this little candle. And so this is the next step in their graph right here, you know. It's going to be about right there. So forgive my terrible drawing, but this is what it's going to look like. If they come in as expected. Now, they come in better than expected. It might be different than this. Actually, it's not going to be this big. It's going to be about right. I'm sorry. I got to get a thicker. There we go. It's going to look about right here, actually. Right about there. So, and it's not terrible. Remember, we are comparing their last one to this quarter right here. So you got to look at their March quarter because seasonality, especially with Meta, with like holidays and quarter four being such a big quarter, you know, you can kind of see like quarter four was their biggest quarter last time at almost $8 EPS. They are expecting a decrease from that down to 522, but their last first quarter is really the one you want to compare it to. It showed up at 471, and so they're expecting 522 today, which is an improvement from their last quarter one EPS. Now, when we take a look at revenue here for Meta, can y'all hear the music? Let me know if you can or can't, I guess I should say. We take a look at revenue, I think it becomes even more interesting. And I think, you know, growth has slowed down, of course, from the early years of Meta. Their last revenue came in at almost 50 billion, slightly under. But today they're expecting 41.27 billion in revenue. Let's go back to that quarter one last year. It came in at 36.5. So 41.27 is an improvement for that as well. And I would look for that to be about right here in terms of where this next candlestick will go in the graph. About right there. You know, not the best drawing here, but you get the point. So again, we'll see if that ends up happening here. Still pretty much part of the trend. You can kind of see their growth slowing down some for sure in the last few years. But as always, like with the tariff here, let me pull this up a little bit. You can see their growth slowing down some, which is pretty standard for big companies like this. Look at their growth right here. So growth slowing, but yeah, still pretty good company. Let me check the chat. How you guys doing? Meta's going to fly high. If not, I'll buy more, somebody says. Meta earnings are after the close. Meta ain't no joke. Somebody said you can't tariff social media. You can, and they will. You know, you can, and they definitely will. It doesn't mean, look, it's not going to be as impacted as other stuff for sure, though. But you could definitely tariff it in some ways. Advertising, spending specifically, and other stuff. But yeah. Yeah, I'm curious about Amazon's earnings call as well. That's what I'm genuinely interested in, what Amazon's earnings call is going to look like. Because I think that one will be incredibly interesting to watch. Apple, too. I don't know which one I'm going to cover, but we'll cover both of them. But I'm curious to see. What's good, brother? Thank you for what you do. Thank you, William. Appreciate it, bro. Tesla at 280s. Oh, so it's back up a little bit, huh? Meta earnings are after the closing bell. All right, so again, we're going to put this out on x.com. At Beginner Trades. Give me a follow if you haven't already. We appreciate it. Thanks so much. All right, so we just put all their guidance expectations again. Quarter one about 41.8 billion. Quarter two revised about 44 billion. OpEx about 119 billion. 114 to 119. CaPex 60 to 65. And so yeah, all stuff you want to watch, pay attention to for sure. And if you're confused, hold on, let me get this post done. Meta's expected volume 7%, Microsoft expected volume 5%. Yeah, that makes sense. I'm assuming you mean the range. And again, just to put this in perspective, CaPex, right, is money spent on long-lived assets like servers, data centers, office build-outs, machinery, research and development, capitalized on the balance sheet, and then depreciated, amortized over the assets' life. For Meta, they expect, again, 60 to 65 billion in 2025, mostly for AI and data center builds. OpEx is operating expenses, day-to-day costs of running the business. Expensed immediately. 114 to 119 is what's expected. Bro, I need to get a tax rate like Meta, dude. Meta only paying 12 to 15% taxes, bro? How? I'm almost mad at that number. 15%, bro? Give me 15% taxes, dude. All right, guys. Hey, we got 25 minutes. Let me get a timer up. Do you think... let me do a poll. I don't think I've done a poll either. Will Meta beat or miss? All right, so there's the poll. The poll is now live. Will Meta beat or miss their quarter one earnings? All right, so here's the timer until the closing bell. And again, taking a look at Meta's revenue. They've had a really good revenue graph, honestly. Their revenue is... And I've told this story a lot with Meta, but I was really skeptical of Meta at some points in in time. Like Meta at one point was under $100 a share. Facebook was losing steam. you know, people just weren't using it as much anymore. I was skeptical of Meta. I never shorted it, but I definitely, like, I remember when it was under $100 a share and it looked weak, I thought it might fail. So to see Meta like 3-4 years after that, almost, where are they at right now in price? Yeah, almost $600 a share. Crazy revenue, you know, just a good company overall. And yeah, kind of goes to show sometimes you shouldn't doubt out these big companies because they can fight their way back. Will Meta go bull bear after earnings? I don't know. That's what I'm asking in the poll, brother. That's what I'm asking in the poll. We'll see. Again, Microsoft as well. Let's take a look at Microsoft. Here's Microsoft's EPS. Again, they are expecting today. Their last quarter of one was 294s. Today they're expecting 320. So they're expecting a bump up there. Their growth is a little bit better. A little bit better trend for growth, especially. 68.38. We also have Robinhood earnings. Taking a look at Microsoft revenue graph. Here's another one. Look at this. So Microsoft's revenue graph. Last time they showed up at almost 70 billion. Today they're expecting 68.3. Their last quarter one was 61.85. So they're expecting about a 7 or 8 billion jump in revenue year over year. Which is like 12% or so. I think we talked about that earlier in terms of metrics. Yeah, we're also going to put a post out about the biggest stories regarding Meta to pay like focus to. All right, so we just put out some stuff talking about yeah, so we ended up posting the stories about Meta's earnings that you probably want to focus on. Yeah, I'm not that mad about it, Eliza. I mean, I'm mad just because of what I have to pay for earnings, but I'm not like that upset about it. I'm okay with it, to be honest, you know. So yeah, so we also have Robinhood releasing earnings today. I'm curious. Let's see what our poll numbers are. So our poll number is 68% of people think they're going to beat. 32% of people think they're going to miss. First day trading in my XFA. Awesome channel. Keep it up, boss. Thank you, Task. Appreciate it, bro. Thank you, sir. Nvidia popping up to 107s. Nvidia having a pretty good day. Amazon drops earnings tomorrow. Still red on the day. A lot of stuff still honestly red based off of where we opened. We opened down in a lot of tech. But things are looking a little bit brighter. NVIDIA's still technically red on the day. Palantir had a freaking day, bro. Palantir up to 117s. Almost 118s for Palantir. When did their earnings drop? That's what I'm really curious about. I want to see what Palantir's. Let's see when their stuff drops. May 5th. So that's next Monday for Palantir. The FOMC meeting's in exactly a week from now as well. Exactly 1 week. $4 p.m. Eastern Standard Time. Yep. Yeah, market closes in 19-20 minutes. Again, technically, like, we don't know when we're going to actually get the earnings. We know Meta's earnings are going to release sometime after the closing bell with Microsoft. But we just don't know when. We know Robinhood drops after 4 p.m. We know QCOM drops right at 4 p.m. Meta is supposed to drop later on, to be honest. Microsoft, Robinhood, both dropping at 4:05 p.m. Eastern Standard Time. So we'll cover all the stuff that drops. I mean, you guys know us. We cover everyone that comes out, in all honesty. We'll cover all of them. But we're going to focus on Meta, you know. Again, inflation earlier showed up at 0% for core PCE month-over-month inflation, which is a big story of the day. 0% inflation month-over-month for core inflation. PCE showed core PCE year-over-year 2.6%. I actually got that one right again. I guessed it right. Let's see if the growth continues here. Y'all do me a favor, hit that like button, hit the subscribe button here. It does help the channel, so we appreciate the love. Thanks so much. Yeah, we got Meta, Microsoft, Robinhood, QCOM earnings. And then tomorrow's Apple. You know, it's still a very busy week in economic reports. Like tomorrow we've got Apple and Amazon earnings. Thursday we got, which is tomorrow, we got jobless claims, ISM data, manufacturing PMI. Friday we got non-farm payrolls, unemployment. You know, next week we got the Fed meeting, ISM services, jobless claims, and then the week after that I think we got CPI and PPI too. So busy time, busy week. We got Palantir popping up. Palantir at 118s. Look at Palantir right now, bro. And again, here's Microsoft. A lot of this stuff's still red. You can see the previous closing price. Some big levels to watch for these earnings. Obviously, Meta's previous close is right here. It's at 554, roughly, just over 554 actually for the previous closing price. So this is where the red to green level on Meta is. So like if it has good earnings, it could, you know, gap up to that level and do something. We'll see. That's a level I'm paying attention to. Beneath us, we got this low of the day right here. The low of the day for Meta, which is a really big range for Meta, but the low of the day is right at 529.50, right under 530. Low of the day. So if we have a weak earnings reaction, that's a level in which you might want to pay attention to. Again, you can kind of see that level on Meta right here. It's at 529.50, 529.50. Probably something you want to watch. In terms of Microsoft, we can kind of look at the same ratio here of levels. We got the low of the day at 384.44. So 384.50 basically, the low of the day for Microsoft. We got the previous closing price at 394s right here. And then we've got the high of the day at 395.20 right around here. So those are some levels you probably want to watch for both of these stocks. We also have Robinhood releasing earnings today. So again, Robinhood dropping earnings. They're expecting a measly 32-cent EPS on revenue of almost $900 million. 32-cent EPS revenue on almost $900 million. So we're looking at Robinhood. QCOM expecting 281 EPS on 10.64 million in rev. eBay dropping also at 405. One to watch. KLA expecting 806 EPS on 3 billion in revenue. So that's still pretty strong. With that said, though, look at Meta's rise here, guys. Look at Meta. Meta's almost up to 545 right now. 545. Still pumping up. And so I'm looking at an article right now that says Meta's earnings are due after the close will be more complicated than normal because the social media company faces new risks. Of the big tech company, Meta's financial statements and stuff like that are the simplest, with 98% of revenue coming from advertising on apps such as Facebook and Instagram, as well as ads newly launched on their new, edition Threads, which is kind of the competitor to X. Conversations on its earnings calls are generally revolve around things like new ad technology, growth in users, ad prices, and ad views. And so they're going to be discussed heavily probably during this earnings call when management speaks with investors about disclosing these numbers. Wall Street expects double-digit growth from Meta. So they're saying that the start of ad sales on Threads might bring more growth than analysts expect. Those numbers would mark a slowdown from 2024 last year, when Meta's revenue grew by 22%, driven by 10% growth in ad views and average prices. Twist this quarter is because of all the rapid shifts in policy coming from the White House. There will be additional questions. Yeah, so just to put this into perspective, almost 2/3 of Meta's 2024 revenue came from outside the United States. You have to remember, Meta sells headsets. So people acting like, oh, Meta doesn't do anything outside the U.S., that's not true. As well as Meta builds these technologies with other countries, workers, goods, probably, at least in a lot of different ways. So analysts are going to want to know whether Meta has seen shifts in international ad spending this month. None of Meta's apps operate in China, though, so that's good. But it does have ad sales to Chinese companies who ship to the rest of the world, which accounted for 11% of their 2024 revenue. And that's a big number. So key customers are the Chinese e-commerce platform Temu and Shine, which aren't only big buyers but often push up ad prices and bidding for Meta. So that's an aspect of Meta's revenue that is going to be potentially impacted by the Chinese tariffs. Temu seems to have some inventory already in the U.S., but it's adding import charges of up to 143% on goods that have to be shipped from China. Temu's U.S. business is built on ultra-low cost goods, so that is going to be potentially a big setback, even if it's just in short term. So investors are going to want to know how this dynamic affects pricing and income. And so, yeah, we got 12 minutes. Yeah, we have a Meta Quest 2 and 3. Our maid stole one of them, to be honest. We know she did it, too. It just disappeared, yeah. But, hey, that's how it goes. Did the percent chance of a rate cut for May and June go up after the inflation data from this morning? Let me take a look. No, so the likelihood of a rate cut for next month in May went down under 5% now. So it's 95 to 5 basically, but it's 4.5. So it's 95.5 to 4.5 at this point in time. The odds of a pause next month went up, not down, which is weird. Again, it was very strange. We got weak economics and low inflation data. You would think that would open the doors to a higher probability of rate cuts. But, at this point in time, though, in June, this rate actually went up a little bit. It's almost 65% likely that we're going to cut 25 basis points by June. And so the June likelihood did increase, although the May likelihood did not. And so that's kind of where we are with rates. Again, Meta's been pushing up, though. Here goes Microsoft. So Microsoft's making a jump. It's at 393s, 394s. Apple popping up. Tesla popping up. Is something happening? Let me see if we got some news. I don't see any news that would justify these big pops. and Amazon. Look at Microsoft jump, Apple jump. Look at that pop. Microsoft almost green on the day, guys. Over 394s. Wow. All right, so Microsoft state lawmakers vote to increase taxes on cap gains, business income, according to Barron's. Apple surging up. Yeah, I don't know if there's any reason. Could just be the MOC right now boosting things. Look at that pop, though. Microsoft now technically green on the day over that 394 level we talked about. We're also pushing towards the high of the day for Microsoft at 395.20s. It's 395. So we're going to get ready for that number of a boost, too. Nvidia pump it up too. I don't really see anything that pushed the market. It's probably just the MOC. Yeah, I don't know. Again, I don't know why the market went up. I mean, the market did end up going up. It's not that they shrugged it. Like I think we had positive reactions in stocks. And again, you can kind of see Microsoft surging up right now. Something happened to Microsoft. Wow. For some reason, Microsoft's running. Did the president tweet? Let's see. He had his roundtable event. I don't see anything else. Yeah, we're surging up though, guys. Look at this move. Yeah, remember we got Meta, Microsoft. Yeah, the MOC imbalance showed 2787.90. NASDAQ 100 1.281 or 1281.8. Dow just under a billion. Mag 7 1.013. Probably the MOC dragging this up. Yeah, so 34 buy count, 19 sell count yesterday. Looking at the market on close data. We're at 394 for Microsoft, dipping down a little bit. Watch this previous close for Microsoft here. We got 6 minutes left until the closing bell. But look at this previous closing price at 394. You see we bounced right off of it. That's a red to green level. So this is the red to green level right here. If we stay over this level, we're technically green. Under this level, we're technically red. I mean, for Meta, it's way up here. So for Meta, we got a long road up there. But yeah. Apple surging up on this report too. Nvidia bouncing all the way up to 108.50s. Yeah, it's a big pump, honestly. We got 5 minutes before the closing bell. It's a big surge. All right, guys. Microsoft at 396. We got Meta up there at 547s. Yeah, I don't know what Robinhood's going to do. I don't make predictions on earnings. I have no freaking idea. I don't have enough information to make predictions on earnings. Nobody does, really. We can guess. But I'll make predictions on inflation data, not really earnings. What a surge at the close, though, guys. Microsoft just broke highs of the day. What a move. Meta creeping up, too. Look at Microsoft pump here, chat. Wow. Apple pumping up. Microsoft up to 396s. It's probably the MOC data. The market on close data. It's probably what it was. See, it's probably just market on close data. All right, guys. 3.5 minutes. Three minutes, chat. Less than 3 minutes. I'm in an option in Microsoft. Do I hold or sell? I really have no idea what you should do here. Microsoft's up a lot. You know, you're not going to be able to mess with it before close. I have no idea what you should do. I'm not an investment professional. I'm not liable if you lose. Always make your own assessment. Trade responsibly, guys. Not an investment professional. I'm not liable if you lose. Everything's pumping up before the closing bell today. I think just be ready. This is a really interesting earnings report here. 2 minutes before close right now. 2 minutes. Let's see what this brings. I don't see anything that he said. I think it was the MOC, the market at close. Dragging it. Again, Meta at 548.70s. Microsoft on the left. All right, less than 2. Yeah. Again, give me a follow at Beginner Trades. We covered a lot of the big stories for earnings today. All right, guys, we got 1 minute left until the closing bell. Again, Meta's scheduled for a little bit later on in the morning, but Microsoft is in the afternoon. Microsoft is scheduled for right at the closing bell at 4:05. Meta's scheduled for about 4:40 is what it says, but it could always drop early. Again, the move is probably just the closing data. Microsoft at 396. This is Coca-Cola, by the way. See? Caffeine is what this is. Nvidia almost green on the day, though. Look at Nvidia surge here. All right, guys. Hey, we got 30 seconds until the closing bell. 30 seconds. Nvidia up to 108.80s. It's trying to get up there. Again, this timer's a little bit early. We got 15 seconds until the closing bell. Let's see what we get. Again, right at the closing bell. Again, we're going to cover all this stuff like we always do. Right at the closing bell, we're going to have QCOM. QCOM set to drop right at the close. So we'll put up QCOM's numbers here. Again, QCOM set for right at the closing bell. There's the closing bell. All right, guys, be ready. Numbers should be dropping anytime now. We're going to cover all of them as soon as they happen, so stick around. Be ready. Look at QCOM. So QCOM was scheduled right for the closing bell. Right for the closing bell. Let's see if we can find it. Big negative reaction for QCOM so far, though. Look at this drop at 146s. QCOM posted second quarter adjusted EPS 285 versus 281 expected. Revenue of 10.84 versus 10.64. They see guidance numbers at 280 versus 266 expected. So they beat EPS, beat revenue, and beat guidance for QCOM, and they are up a little bit after closing red. They have retraced that whole move. Again, we'll put these numbers up in chat. Again, we'll put these numbers up in chat. QCOM has negatively reacted. There's QCOM's numbers in chat right now. You can see QCOM negatively reacting here. We do have Microsoft numbers. Microsoft is surging right now, guys. Wow, Microsoft up to 413s for Microsoft. 413s. Microsoft numbers are out. Microsoft ended up showing. Let's find it. I'm assuming Microsoft has got to be out, right? Microsoft up to 415s. Yeah, QCOM 285 versus 280. Microsoft still pumping here. Microsoft quarter 3 EPS 346 versus 322. Intelligent Cloud revenue showed up at 26.8 versus 26.17. Productivity and business processes revenue showed up at 29.9 versus 29.6 expected. So better than expected for Microsoft for most part, I'm seeing here. And Microsoft is surging up right now at 420s at this point in time. 420s for Microsoft. Crazy. Again, Microsoft with a big move here, up to over 420s. For Microsoft, putting in big gains, big movement here. And again, Microsoft, what I showed, beat EPS, beat revenue, beat guidance. Quarterly CaPex at $21.4 billion for Microsoft. Wow. So again, Microsoft double beat on sales and earnings. They posted 346 versus 321. Revenue of 70.07 versus 68.48 for Microsoft. Wow. Microsoft killed it. Again, I'll put Microsoft's numbers up on screen. Apple's tomorrow. There's Microsoft in chat right now. Here's QCOM. We're also posting these live to our x.com page at Beginner Trades pretty quickly too. But look at Microsoft surge. We do have Robinhood scheduled to release this afternoon as well. Look at Microsoft go. No, Meta's not out yet. You'll see Meta. You'll see, like, you'll be able to know when they're out by the movement that you see here. So, like, you see how it's, like, pretty small range for Meta. That means it's probably not out. You see how Microsoft, like, this huge. This means that they're out. You know, this is the big number. Robinhood's scheduled to report at 4:05 p.m. Eastern Standard Time. 4:05 p.m. All right, so we put Microsoft's numbers up at the bottom of the screen now. And they're flying up. Robinhood's supposed to drop in about 30 seconds. Look at Microsoft go. I mean, Robinhood is up, though. Look at this. Nvidia pumping up to almost 110s right now. Let me check, make sure Robinhood's not out yet. I don't see Robinhood out yet. They're supposed to drop right there in 5, 4, 3, 2. So we'll see if the movement happens. All right, and now. They're supposed to drop right now. Watch Robinhood for movement. Meta might be out with theirs. Meta just had a big jump, guys. Meta just had a big jump. It looks like they might be out. Meta posted quarter 1 EPS of 643 versus 525 expected. 643 versus 525 expected. Revenue of 42.3 versus 41.3 expected. Much better than expected for Meta as well. Yeah, so Meta killed it. They did good. Again, quarter one EPS of 643 versus 525. Revenue of 42.31 versus 41.38 expected here for Meta. And they're up a little bit on this report. We'll put this up on screen quickly. Robinhood just released as well. We'll cover that in a second. But man, there's Meta's numbers right there on screen. Robinhood turning down a little bit. Let me see if I can find their numbers here. I see the quotes. Robinhood came in at 37-cent EPS. Finding revenue is like a needle in a haystack sometimes with these earnings. Robinhood's starting to turn. Microsoft. Look at this move. Still up big for Microsoft. Still flying up here. Why is Meta not flying like Microsoft? I don't know. It's just not. Yeah, they don't always act the same. Meta at 565s, pulling back down a little bit. So we're going to cover all of Meta's numbers here real quick, just to put this into perspective. So Meta, they said, we had a strong start to an important year. Our community continues to grow and our business is performing well, said Mark Zuckerberg, founder and CEO. We're making good progress on AI glasses and Meta AI, which now has almost 1 billion monthly actives. They see fiscal year CaPex at 64 to 72 billion, up from the prior 60 to 65 billion for Meta CaPex here. We're going to put some of these numbers in chat. There's the CaPex numbers. They see quarter two guidance coming at 45 billion versus 44 billion expected here for guidance numbers. And again, so family daily active people was 3.43 billion on average for March, an increase of 6% year over year. Ad impressions, they delivered up 5% ad impressions. Average price per ad showed up, increased by 10% year over year. Revenue was 42.3, an increase of 16% year over year. Revenue on a constant currency basis increased 19% year over year. Total costs and expenses 24.76 billion, increase of 9%. Year over year. You can see Microsoft pulling back CaPex, including principal payments on finance leases, 13.69. Share repurchase Class A were 13.4 billion. Cash was about 70.323 billion as of March 31st. Cash flow from operating activities was 24 billion. Free cash flow was 10.33 billion. Headcount was 76,834 as of the end of March. Yeah, we also have KLA earnings releasing right now. Let's take a look if we can find Robinhood's. So Robinhood did not react well to their earnings here if you look at it. Or at least it reacted negatively and then it rebounding back up as we speak right now. So Robinhood posted 37 cent versus 33 cents expected. Revenue of 927 versus 917 expected. So I'm sorry. So yeah, Meta sees fiscal year 25 CaPex 64 to 72 billion, up from prior outlook of 60 to 65. So Robinhood's starting to creep up. Microsoft finally starting to pull back, though, after this big surge in activity here. Microsoft finally started to dip a little bit. We'll see if it holds. I don't know. Look in front of the TV. Bitcoin liked it. Where's Bitcoin at? I mean, tech and Bitcoin can can move parallel. Yeah, Bitcoin's up to 95 in futures. I remember we got the actual Meta earnings call going live in about 50 minutes or so. 50 minutes. Meta at 570s. Palantir up to 119.50s. So Palantir's rising here. You can see Microsoft at 416s. Look at Meta start to creep back up. So Meta back up to 572 right now. Getting up there. Highs of the day are now 580. 580. And we jumped over that previous closing price too. So we're up to 572s, almost 575s for a Meta here. So we're slowly creeping back up, starting to fight our way up here. All right, so we do have Meta's earnings call coming live soon. Should I stick around and cover the call? All right, so look at Microsoft and Meta. So Meta just hit 575s right now, 575s. Aflac posted 166 versus 168, revenue of 3.4 versus 4.3 expected. Big miss for Aflac in revenue. Again, Meta guided well too. Meta guided at 45.5 versus 43.8 expected here. We'll put this up in chat as well. And so again, their CaPex increase. Yeah, so guidance numbers, we just posted for Q2 guidance numbers here. In the comment section, guidance numbers showed 42.5 to 45.5 bill versus the consensus of 43.8. So guidance numbers did show a little bit stronger than expected here for guidance for Q2 for Meta. CaPex increased as well, up from 60 to 65 billion. They ended up showing 64 to 72 billion. So CaPex got a little higher. All right, so we tapped 575s here. We got 580s up here as well. All right, let's see if Meta holds 570 right now. I think 570 is a big level, a big enough level to watch. Again, the actual earnings call is in about 45 minutes. Did we win or not? What do you mean win? I mean, Meta's up a lot from their earnings. Yeah, I mean, Nvidia and others are pumping up because of the CaPex increase, for sure. You know, they originally said 60 to 65. Now they're saying 64 to 70. What was it? Yeah, 64. Yeah, so this CaPex, 64 to 72 billion is what they're now expecting here. So this is why you're seeing some microchip stocks. You can see this number right there in chat. So Meta says we continue to monitor an active regulatory landscape, including legal and regulatory headwinds in the EU and the US that could significantly impact our business and our financial results. So here's tariff talk here. Here's them kind of mentioning tariffs right now as we speak. So again, so we dipped a little bit on this quote. So again, they put out the quote that said, "We continue to monitor an active regulatory landscape, including legal and regulatory headwinds in the EU and US that could impact our business and financial results." And again, you can kind of see they're at 569s right now. They had this quick little dip down on this report, but yeah, they're still doing pretty good though. They're still up. Ooh, about to fall down here. Yeah, so Meta pull it back a little bit on this quote. All right, so we got one person saying this is unusual. The S&P rallied over 150 points off of its low today in a matter of hours between 3:30 and 4 p.m. Eastern Time. S&P futures rallied 75 points without any major news. 5 minutes later, Meta, Microsoft, and more posted massive earnings beats. Is this suspect or no? I mean, I saw it happen. We had big run-ups and a lot of this stuff leading into the earnings. The problem is you don't ever know how the public's going to react to earnings. You really don't. Like, you don't know how the public's going to respond to earnings. They could respond well. They could not respond so well, you know. So, like, you don't know what they're going to do in response to these earnings. All right, guys. Microsoft at 415.80s. Meta all the way at 468s right now. 468s. Yeah, I know. I kind of agree with that. Well, whether it's suspect is subjective, Henry. You know what I mean? Like, whether you consider the suspect is subjective. I might think pineapple on pizza is suspect. You know, but that's just my opinion. You know what I mean? I don't think pineapple belongs on pizza, personally. You know, other people might love pineapple. In the end, it's all opinion. It's a hardware versus software rally, but Nvidia's up too. Well, yeah, that has to do with the CaPex, right? So the CaPex, like how much they're going to be spending on AI, is at increase. They previously thought 60 to 65 billion CaPex spending. Now they've raised that to 64 to 72 billion. So up from prior 60 to 65 billion. So that is why you're seeing hardware companies like Nvidia and Apple and maybe not Apple, but that's why you're seeing some of these hardware companies run up into this earnings report from Meta, because their CaPex went up even more, right? So like they're going to spend even more on potentially AI hardware systems, you know what I mean? And that's good for Nvidia and other hardware companies. And so that's why you're seeing hardware stocks run up in sympathy from Meta's metrics that came out. I don't think it necessarily had to be rhetorical. I was genuinely asking the question. So I mean, yeah, I'm just genuinely asking the question. Yeah, so Microsoft's still up huge. And we did get some pretty big increases in shares. Like, look, at the time it looked big, but in like now, like, look. Meta's trying to hold too. Yeah, I don't know if these hold in tomorrow, guys. We're going to cover the 4 earnings calls, so stick around. Like, we'll cover it like we always do. Yeah, look at Microsoft still pumping up, though. It's at 417s. Hit over 420s for a second. Let's see if we hold. So a lot of stuff's run up and then pulled back now. Microsoft, Nvidia, Meta, Bitcoin, Palantir, others. And so, yeah, so I'm reading some other comments. All right, so Microsoft back up to 420, just tapped it. Meta's over 570 now. I think big money does what it wants, Henry. And now whether you consider that suspect depends on your view on things. I think the whole benefit of having big money is to do what they did. And I can't really get mad at them for it, you know. Well, we already got guidance for Meta. So we already got Meta guidance. So Meta guidance is already out. It posted Q2 increase in guidance. So they did pretty good. So we actually had better guidance for Meta than expected. Q2 at least. Microsoft, they might be waiting on Microsoft. Yeah, we're sitting tight waiting here. We got 30 minutes left until the actual call. All right, guys. All right, Meta hit 573s. Palantir at 119s. Microsoft got over 420s. Meta back up to 573s. There's 580 levels looking at me right now, this high of the day. I mean, it's an answer. Yeah, my answer is my answer in terms of whether I think it's suspect. I think it's how the world works, you know. We're going to put the guidance numbers up a little bit better on screen now. All right, so the EU is going to present trade proposals to U.S. next week, according to Bloomberg. White House advisor Hassett says they wouldn't be surprised if GDP data is revised up. And MGM also posted 69-cent EPS on revenue of $4.28 billion. Sorry, let me get this number out the way. All right, so we're over 575s, testing 580s now here. I got a barbell on Microsoft, hoping the move holds. It always goes the other way with options, at least for me. Yeah, well, that's why I don't like options. Like, with big money doesn't play options as much as retail, because big money just buys shares. They're less restrictive. You can hold them as long as you want. And if you end up green, you end up green. There's no conditions on shares like there are in options. And so if you have enough money, you don't need to buy options. You just buy shares and then do whatever you want with them. And I think that's a huge innate benefit of shares versus options. One of the reasons I don't play options that much, because a lot of the, like, I started playing options and I was right about the move, but I was wrong about the time frame, which is very easily could happen. You know, right about the move, wrong about the time frame, and that drove me away from the options market. Bitcoin's still up though, so Bitcoin is reacting positively. And again, the big story of this earnings call, is CaPex increase from 60 to 65 to 67 to 72. What was it? Was that it? There was some type of increase like that, right? It was 64 to 72 now, up from prior 60-65. So we'll put this on the bottom too. There you go. So you can kind of see this is what's driving a lot of like hardware companies up right now. The second line right here. You see how it says fiscal year 25 CaPex 64 to 72, which is up from 60 to 65 last time. That is what's benefiting a lot of these big companies in hardware like AI, like NVIDIA. You want to know why NVIDIA ran up to 112s, 113s when it didn't even report earnings? That's why. It's because it's beneficial for their hardware. The more companies spend on AI, like Meta, the better it is for NVIDIA, which sells hardware around AI. And so that's why they're up. All right, guys, we got 30 minutes into the earnings call. 30 minutes. We'll put the timer up. Earnings was good. Yeah. Microsoft did great. I mean, look at their earnings. So Microsoft's up a huge percentage from their earnings. Microsoft's up what? What is this? Like $30 a share? Yeah, about $30 a share. So not quite 10%, but what, like 7-8% move? 8-9%. I'm trying to do percentage math in my head. I know it's something. It's like 8 or 9% is what it looks like to me. Yeah, it's 8% is what it is. Top 3 greatest math people in the world right now. Well, it is. The real actual number is 7.7%. Is what the actual number is. If the math would be a lot easier if it was up $40 for a $400 stock, you know, then it'd just be an even 10%. It'd be a lot easier. All right, guys. So, again, we got 25 minutes or so. And so we got a little time here. We're just kind of sitting tight waiting. Did Broadcom release? I don't think so. I don't think Broadcom came out today. Yeah, I don't think Broadcom came out today. I think... yeah, here's the timer. Unless I just missed Broadcom. I don't think I did. Yeah, I don't think I missed them. Again, if you give me a follow on x.com, we're going to put a full list of all the earnings and results that showed up today. Yeah, so this list includes Microsoft, Meta, Robinhood, QCOM, ALB, eBay, SFM, KLAC, CP, GRBK, and more. Most of the stuff beat EPS. I don't think one of these companies, like, look, here's the list of most of the stuff that dropped. I don't think any of these companies missed EPS. So they all came in better than expected for EPS this afternoon. Hey, what's up? What's up, buddy? Hey. I said, hey, what's up, dude? You called me. No. I know, buddy. I have to work. It'd have to be after I work. And we might have to do that tomorrow. Okay, I know. Look, I can buy you... Alright, sorry. I'm getting chewed out by my son. I told him I'd take him to play putt-putt golf today after school, but I forgot I had this earnings call I gotta do. He was cool with it. He just asked for some video game money. He knows how to, you know, he can pivot. Meta's creeping up, though. About to break highs at pre-market right now. Yeah, honestly, so this is a hilarious aspect. So look at Meta. Meta's about to break 580s. I'll tell you guys a story in a second. But Meta's shooting up. It's at 578. It's about to break highs. Let's see what happens. All right, there's some chatter that the House Ways and Means Committee is going to mark up their tax package on May 8th. I'm trying to make sure there's no... mini golf on the Oculus. No, so the other day I was at jiu-jitsu with my son. And my son was doing jiu-jitsu. And he was rolling with the other kids his age. And, like, he wasn't getting tapped. Like, my son refuses to tap. He never taps. And, like, he almost never gets tapped out because of it, which is great. I'm glad he's resilient. But he was kind of getting thrown around by one of the other, like, competition kids that was there. And I told him, I was like, hey, bro, listen. You beat that kid, I'll give you $20 in Minecraft money. And, dude, the next roll that guy had with that kid, like, Jack just did amazing. Like, he actually beat the kid. He tapped him out. He got him in a triangle. Like, he did all kind of stuff. And I just kind of told him, I was like, bro, how do I channel that? How do I channel that focus like that besides just paying you money and giving you Minecraft money? Like, how do I channel that money? As soon as he heard Minecraft money, he's like, okay, you know. I wish there was another way. I don't know what else to do. I don't know what else to give him, you know, to make him perform like that in jiu-jitsu, but man. Meta 600 by the end of the week. It's over. It just broke highs at 580. So we're over 580. We're almost up to 582s now. We hit 581.80s at the highs of the day. We still only got 20 minutes until the earnings call here. So can you explain QCOM earnings and why it is falling? Sure. QCOM had a big negative reaction here. Business mentality, I guess so. I'm a blue belt. I'm looking at QCOM here. Hold on. QCOM posted 285 versus 280, revenue of 284 versus 260. So a beat EPS, beat revenue. Honestly, though, I think they want more right now. I think just to beat an EPS and revenue is not good enough. They must have seen something in the report that they didn't like. It looks like they may have had a little bit worse than expected guidance numbers for QCOM. They had better than expected sales guidance for quarter 3. They showed 280 versus 267, 10.7 billion in sales versus 10.35. So they did good at guidance. I don't know why QCOM's down so much. I really don't. The CEO highlighted focus on, quote, critical factors we can control, end quote. Maybe that's why. I don't know. Sometimes you never know. Light guidance. It topped estimates but gives light guidance is what most people are saying in terms of QCOM. But I don't know. You never know why they're reacting negatively. Sometimes they just do. Sometimes it just does, you know. Meta's still rising up. It's at 579. It's almost 580s here. Is this a candle on QCOM? Look at this. I don't know if this is an actual candle. I feel like it's going to retrace. Yeah, there it goes. So just a little fake candle there for QCOM. QCOM down big. I don't know why it's down. Somebody else might be at it. I don't know QCOM that well. It's not really one of those stocks that I cover a lot. All right, so again, Meta earnings call goes live 5 p.m. Eastern Standard Time. We already talked about some stuff here, but we're going to talk about some more during the actual earnings call for Meta. Yeah, I'm looking at some other stuff, but Meta's consolidating very sideways. QCOM about to break lows. Microsoft is up here. Microsoft's churning up almost to 420s here. Look at Microsoft. So Microsoft has trouble breaking highs after it put in that initial high up there at 422.60. Alright guys, so I'm trying to... Okay, so that one's associated too. Alright. Alright, so Meta's still pumping up, guys, at 585s right now. 585s. We only got 15 minutes before the earnings call starts. Yeah, just 15 minutes. All right, we got the Meta earnings call. All right, so they're getting the event set up here. And so again, you can kind of see their Q1 earnings presentation here for Meta. You can see kind of all the stuff that they're going to show during the actual earnings call. Okay. All right, I'm gonna mute the music. I'm trying to check this to make sure we don't get any like lags during the call. Nvidia just broke highs of the day again, though, guys. Got up to 112.60s. 112.60 right now. Yeah, I hear somebody saying, oh, Broadcom is already out in Meta. So we're talking about the actual earnings call, not the earnings release. You can see the earnings right here. Here's the earnings for Meta. They're already out. Microsoft's out. All the other big companies are mostly out for the day. We're talking about the call is what we're going to be streaming here live like we do. And again, here's a post breaking down all the big earnings that released today. If you want to check it out, here's our x.com page. You can give me a follow there at Beginner Trades. Great way to help support the channel. We've been growing a lot there. Again, if you haven't already, check out TopStep. TopStep, great way to learn how to day trade. Most day traders lose. So if you put up your own money, you're probably going to lose thousands of dollars. Most new day traders do when they learn to day trade. Most day traders lose thousands of dollars. It's called a market tuition. You can either pay that funding your own account, which makes absolutely no sense, or you can try a funded account program. TopStep gives you a 50K demo account. If you can make 3K in profit without losing 2K, a 3-to-2 reasonable ratio, following their rules, they fund you $50,000 with a 90% split. You get to keep your first 10K prior to the split kicking in. Very similar to funding your own account in terms of split and all that stuff. If you fail, you're out $50. It's the best of both worlds. Limited risk, similar reward to funding your own account, noticeably less risk in my opinion. It's a perfect way to learn how to day trade. You still have some risk. You're still risking something, learning in a structured environment, and it teaches you how to be a better trader. To be honest, tons of great resources. If you fail, you're out $50. It's not the end of the world. It's a great way to learn. They're an affiliate of mine. Some would say I'm the top 3 most biased trader of all time ever in the world right now. But if you want to check them out, I'll put the link up. Great way to help support your boy here in this channel. There's the link right there. I'll also put it to the top of the chat. And yeah, it sounds pretty good. It doesn't sound like we're lagging at all. I'll have to exit out some stuff, but all right, guys. We're going to turn the sound up, too. So, like, I pride myself on being one of the loudest earnings calls players in the world right now. And so we appreciate the love. Thanks so much. Be ready, guys. We got 10 minutes left. Ten minutes, chat. Yeah, it's pinned at the top of the chat. It's right underneath the poll if you voted. Can we get an update from Meta's earnings call? Stock pump during the call? Meta's earnings call hasn't started yet. Meta's earnings call is at 5 p.m. Eastern Standard Time. Again, we're sitting here waiting for the call to start. They just haven't started yet. You can see all their reports here, though. But they just haven't started yet. So we're just waiting, sitting tight. I'm not really going to trade right now, no. Yeah, QCOM still hasn't come back. QCOM's still down big. It's at 139.40 here. We got 9 minutes left. Let's take a look at their EPS graph to see if it's uploaded. No, not yet. So again, they ended up showing, here's their EPS graph for Meta. This is like the history of their EPS. They ended up showing, wait. Yeah. They ended up showing 643 EPS. So they ended up showing like right here. Which is pretty good. Their last quarter 4, right? Like this is their last one. So their last quarter 4 was, or their last quarter 1 was right here. So I mean, this was their last one. This little guy, right here. That was their last one. So they did much better, you know, in terms of revenue than their last quarter 4 or quarter 1. I don't know why I keep saying quarter 4. They did a lot better than that last quarter 1 EPS. Yeah, Robin Hood's out. We got a bunch of the big ones out. All right, guys, we got a couple minutes left, not long. QCOM sees quarter 3 revenue guidance at 10.7 billion. All right, we're gonna just put Meta's chart up big on the screen right here, I think. Watch what they do there during the call. Again, Meta ended up showing Robinhood launches prediction markets hub. So Robinhood launched some type of hub for predictions. And again, the big thing with Meta is they increase their CaPex. All right, guys, less than 5 minutes, 4 minutes left. Microsoft's calls at 5:30. Let me switch my headphones out here. Should I leave my headphones on? All right, guys, you guys ready? Do me a favor, hit that subscribe button, hit the notification bell. We appreciate it. I'm gonna exit out of a lot of this stuff so I don't have anything going in the background here. Just once the earnings call starts, let me know if you can hear it well. You should be able to hear it pretty solid. Exit out of all this. Get our clock. We got 3 minutes left. Okay, we should be pretty good here in terms of what we're using. So it's good for hardware companies. So they increase their CaPex. So the reason I say it's good, the big thing is because them increasing their CaPex means that they're going to be spending more money on hardware for AI systems, and that's good for NVIDIA. That's boosting NVIDIA, which consequently boosts the rest of the market. And so when I say that's good, I mean they're spending more on other tech, and that's good because that's going to boost the rest of the tech market, and that's why the rest of the tech market kind of went up with all the stuff going on, is because of that, if that makes sense, right? Like they had a big boost in CaPex, which means they're going to be spending more money on other tech, which is good. So I hope that makes sense. Anyways, we're about to start pretty soon. Make sure. We're about to start. Is the president about to speak? Are you talking about the University of Alabama? Because I don't really. Is that today? Is that what he's doing? I don't know. It's hard to. He speaks almost every day. It's hard to track. Most of the time, it's not about anything market related. So. No. Somebody says, is it possible to start trading with $20? No. No, it's not. Not really. All right, there's the timer. It should be starting any time now. Anytime. And I'm going to turn the volume up a lot so you can make sure you guys can hear it. Hold on. All right, so yeah, we're going to turn the volume for desktop audio way up. And then once it starts, just let me know if you can hear it. You should be able to hear it pretty well. They still haven't started yet. Still waiting.
Good afternoon. My name is Krista, and I will be your conference operator today. At this time, I would like to welcome everyone to the Meta First Quarter Earnings Conference Call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question, please press star one on your telephone keypad. To withdraw your question, again, press star one. We ask that you limit yourself to one question, and this call will be recorded. Thank you very much. Kenneth Dorrell, Meta's Director of Investor Relations, you may begin.
Thank you. Good afternoon and welcome to Meta's first quarter 2025 earnings conference call. Joining me today to discuss our results are Mark Zuckerberg, CEO, and Susan Li, CFO. Our remarks today will include forward-looking statements, which are based on assumptions as of today. Actual results may differ materially as a result of various factors, including those set forth in today's earnings press release and in our annual report on Form 10-K filed with the SEC. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and certain non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The earnings press release and an accompanying investor presentation are available on our website at investor.meta.com. And now I'd like to turn the call over to Mark.
All right, thanks, Ken. Thanks, everyone, for joining today. We've had a strong start to the year. Our community keeps growing with more than 3.4 billion people now using at least one of our apps each day. Our business is also performing very well, and I think we're well positioned to navigate the macroeconomic uncertainty. The major theme right now, of course, is how AI is transforming everything we do. And as we continue to increase our investments and focus more of our resources on AI, I thought it would be useful today to lay out the 5 major opportunities that we are focused on. Those are improved advertising, more engaging experiences, business messaging, Meta AI, and AI devices. And these are each long-term investments that are downstream from us building general intelligence and leading AI models and infrastructure. Even with our significant investments, we don't need to succeed in all of these areas to have a good ROI. But if we do, then I think that we will be wildly happy with the investments that we are making. The first opportunity is improved advertising. Our goal is to make it so that any business can basically tell us what objective they're trying to achieve, like selling something or getting a new customer, and how much they're willing to pay for each result. And then we just do the rest. Businesses used to have to generate their own ad creative and define what audiences they wanted to reach. But AI has already made us better at targeting and finding the audiences that will be interested in their products than many businesses are themselves. And that keeps improving. And now AI is generating better creative options for many businesses as well. I think that this is really redefining what advertising is into an AI agent that delivers measurable business results at scale. And if we deliver on this vision, then over the coming years, I think that the increased productivity from AI will make advertising a meaningfully larger share of global GDP than it is today. In just the last quarter, we're testing a new ads recommendation model for Reels, which has already increased conversion rates by 5%. And we're seeing 30% more advertisers are using AI creative tools in the last quarter as well. The second opportunity is more engaging experiences. This will come in 2 forms: better recommendations for existing content types and better new types of content. In the last 6 months, improvements to our recommendation systems have led to a 7% increase in time spent on Facebook, a 6% increase on Instagram, and 35% on Threads. Threads now also has more than 350 million monthly actives and continues to be on track to become our next major social app. In addition to better recommendations for existing content types, AI is also enabling the creation of better content as well. Some of this will be helping people produce better content to share themselves. Some of this will be AI generating content directly for people that is personalized for them. Some of this will be in existing formats like photos and videos, and some of it will be increasingly interactive. I've often talked about this long-term trend of content becoming richer over time. Our feeds started mostly with text and then became mostly photos when we all got mobile phones with cameras, and then became mostly video when mobile networks became fast enough to handle that well. We are now in the video era, But I don't think that this is the end of the line. In the near future, I think that we're going to have content in our feeds that you can interact with, and that it'll interact back with you rather than you just watching it. Over the long term, as AI unlocks more productivity in the economy, I also expect that people will spend more of their time on entertainment and culture, which will create an even larger opportunity to create more engaging experiences across all of these apps. The third opportunity is business messaging. Right now, the vast majority of our business is advertising in feeds on Facebook and Instagram. But WhatsApp now has more than 3 billion monthly actives, with more than 100 million people in the US and growing quickly there. Messenger is also used by more than 1 billion people each month, and there are now as many messages sent each day on Instagram as there are on Messenger. So business messaging should be the next pillar of our business. In countries like Thailand and Vietnam, where there is a low cost of labor, we see many businesses conduct commerce through our messaging apps. There's actually so much business through messaging that those countries are both in our top 10 or 11 by revenue, even though they're ranked in the 30s in global GDP. This phenomenon hasn't yet spread to developed countries because the cost of labor is too high to make this a profitable model before AI, but AI should solve this. So in the next few years, I expect that just like every business today has an email address, social media account, and website, they'll also have an AI business agent that can do customer support and sales. And they should be able to set that up very easily, given all the context that they've already put into our business platforms. And we're going to have more to share on upcoming calls about our progress in this area. The fourth opportunity is Meta AI. Across our apps, there are now almost 1 billion monthly actives using Meta AI. Our focus for this year is deepening the experience and making AI the leading personal AI, with an emphasis on personalization, voice conversations, and entertainment. I think that we're all going to have an AI that we talk to throughout the day while we're browsing content on our phones, and eventually as we're going through our days with glasses. And I think that this is going to be one of the most important and valuable services that has ever been created. In addition to building Meta AI into our apps, we just released our first Meta AI standalone app. It is personalized, so you can talk to it about interests that you've shown while browsing Reels or different content across our apps. And we built a social feed into it, so you can discover entertaining ways that others are using Meta AI. And initial feedback on the app has been good so far. Over time, I expect that the business opportunity for Meta AI to follow our normal product development playbook. First, we build and scale the focus on revenue. In this case, I think that there will be a large opportunity to show product recommendations or ads, as well as a premium service for people who want to unlock more compute for additional functionality or intelligence. But I expect that we're going to be largely focused on scaling and deepening engagement for at least the next year before we'll really be ready to start building out the business here. The fifth opportunity is AI devices. Of computing platforms. Glasses are the ideal form factor for both AI and the metaverse. They enable and talk to you throughout the day, and they let you blend the physical and digital worlds together with holograms. More than 1 billion people worldwide wear glasses today, and it seems highly likely that these will become AI glasses over the next 5 to 10 years. Building the devices that people use to experience our services lets us deliver the highest quality AI and social experiences. And this will serve as an amplifier on unlocking some new opportunities as well. Ray-Ban Meta AI glasses have tripled in sales in the last year, and the people who have them are using them a lot. We've got some exciting new launches with our partner EssilorLuxottica later this year as well that should expand that category and add some new technological capabilities to the glasses. On Quest, we are also seeing deeper engagement as Quest 3S makes VR accessible to more people, and more people are creating experiences in Horizon with AI tools. Now, everything that I've talked about today is built on top of our AI models and our infrastructure. We released the first Llama 4 models earlier this month, and they are some of the most intelligent, best multimodal, lowest latency, and most efficient models that anyone has built. We have more models on the way, including the massive Llama 4 Behemoth model. Overall, we are focused on building full general intelligence. All of the opportunities that I've discussed today are downstream of delivering general intelligence and doing so efficiently. The pace of progress across the industry and the opportunities ahead for us are staggering. I want to make sure that we're working aggressively and efficiently. And I also want to make sure that we are building out the leading infrastructure and teams that we need to achieve our goals. City online more quickly this year, as well as some longer term projects that will give us the flexibility to add capacity in the coming years as well. And that has increased our planned investment for this year. More broadly, this has been a good start to what I expect will continue to be an intense year. We've got a lot more exciting work in the pipeline that I'm looking forward to sharing soon. I continue to think that this year is going to be a pivotal moment for our industry. And I am grateful for everyone who is working so hard at the company to deliver all of this amazing technology and new experiences. As always, thank you all for being on this journey with us.
Afternoon, everyone. Let's begin with our consolidated results. All comparisons are on a year-over-year basis unless otherwise. $2.3 billion, up 16% or 19% on a constant currency basis. Q1 total expenses were $24.8 billion, up 9% compared to last year. In terms of the specific line items, cost of revenue increased 14%, driven primarily by higher infrastructure costs and payments to partners, partially offset by a benefit. R&D increased 22%, mostly due to higher employee compensation and infrastructure costs. Marketing and sales increased 8%, driven mainly by an increase in professional services related to our ongoing platform integrity efforts. G&A decreased 34%, driven primarily by lower legal-related costs. We ended Q1 with over 76,800 employees, up 4% quarter over quarter. First quarter operating income was $17.6 billion, representing a 41% operating margin. As we recognized excess tax benefits from share-based compensation due to the increase in our share price versus prior periods. Net were $13.7 billion, driven by investments in servers, data centers, and network infrastructure. Free cash flow was $10.3 billion. We repurchased $13.4 billion of our Class A common stock and paid $1.3 billion in dividends to shareholders, ending the quarter with $70.2 billion in cash and marketable securities and $28.8 billion in debt. Moving now to our segment results. I'll begin with our Family of Apps segment. Our community across the Family of Apps continues to grow, and we estimate more than 3.4 billion people used at least one of our Family of Apps on a daily basis in March. Q1 total Family of Apps revenue was $41.9 billion, up 16% year over year. Q1 Family of Apps ad revenue was $41.4 billion, up 16% or 20% on a constant currency basis. Within ad revenue, the online commerce vertical was the largest contributor to year-over-year growth. On a user geography basis, ad revenue growth was strongest in Rest of World and North America at 19% and 18% respectively. Europe and Asia Pacific grew 14% and 12%. In Q1, the total number of ad impressions served across our services increased 5%, and the average price per ad increased 10%. Impression growth was mainly driven by Asia Pacific. Pricing growth benefited from increased advertiser demand, in part driven by improved ad performance. This was partially offset by impression growth, particularly from lower monetizing regions and surfaces. Family of Apps other revenue was $510 million, up 34%, driven mostly by business messaging revenue growth from our WhatsApp business platform, as well as Meta Verified subscriptions. We continue to direct the majority of our investments toward the development and operation of our Family of Apps. In Q1, Family of Apps expenses were $20.1 billion, representing 81% of our overall expenses. Family of Apps expenses were up 10%, mainly due to growth in employee compensation and infrastructure costs, which were partially offset by lower legal-related expenses. Family of Apps operating income was $21.8 billion, representing a 52% operating margin. Within our Reality Labs segment, Q1 revenue was $412 million, down 6% year-over-year due to lower Meta Quest sales, which were partially offset by increased sales of Ray-Ban Meta AI glasses. Reality Labs expenses were $4.6 billion, up 8% year-over-year, driven primarily by higher employee compensation. Reality Labs operating loss was $4.2 billion. Turning now to the business outlook. There are two primary factors that drive our revenue performance: our ability to deliver engaging experiences for our community and our effectiveness at monetizing that engagement over time. On the first, we're focused both on enhancing our core Family of Apps today and building the next generation of devices and experiences through Reality Labs. I'll start with our Family of Apps. In the first quarter, we saw strong growth in video consumption across both Facebook and Instagram, particularly in the US, where video time spent grew double digits year-over-year. This growth continues to be driven primarily by ongoing enhancements to our recommendation systems, and we see opportunities to deliver further gains this year. We're also progressing on longer-term efforts to develop innovative new approaches to recommendations. A big focus of this work will be on developing increasingly efficient recommendation systems so that we can continue scaling up the complexity and compute used to train our models while avoiding diminishing returns. There are promising techniques we're working on that will incorporate the innovations from LLM model architectures to achieve this. Another area that is showing early promise is integrating LLM technology into our content recommendation systems. For example, we're finding that LLM's ability to understand a piece of content more deeply than traditional recommendation systems can help better identify what is interesting to someone about a piece of content, leading to better recommendations. We began testing using Llama in Threads recommendation systems at the end of last year, given the app's text-based content, and have already seen a 4% lift in time spent from the first launch. It remains early here, but a big focus this year will be on exploring how we can deploy this for other content types, including photos and videos. We also expect this to be complementary to Meta AI, as it can provide more relevant responses to people's queries by better understanding their interests and preferences through their interactions across Facebook, Instagram, and Threads. Earlier this year, we began testing the ability for Meta AI to better personalize its responses by remembering certain details from people's prior queries and considering what that person engages with on our apps. We are already seeing this lead to deeper engagement with people we've rolled it out to, and it is now built into Meta AI across Facebook, Instagram, Messenger, and our new standalone Meta AI app in the US and Canada. We're also continuing to focus on helping people connect over content. In Q1, we launched a new experience on Instagram in the US that consists of a feed of content your friends have left a note on or liked, and we're seeing good results. We also just launched Blend, which is an opt-in experience in direct messages that enables you to blend your Reels algorithm with your friends to spark conversations over each other's interests. These features all lean into Instagram's position at the intersection of entertainment and social connection. WhatsApp remains at its core a private messaging app, but it has evolved to also become a place people come to get updates from accounts they are connected to or follow. Today, there are tens of billions of views of status posts on WhatsApp each day, and we continue to invest in the Updates tab as a place people can go to do more. Creators remain another big focus for us, and we're investing in tools to help them produce the best original content on our platforms. Last week, we launched our standalone Edits app, which supports the full creative process for video creators, from inspiration and creation to performance insights. Edits has an ultra-high resolution, short-form video camera and includes generative AI tools that enable people to remove the background of any video or animate still images, with more features coming soon. Moving to Reality Labs, we're seeing very strong traction with Ray-Ban Meta AI glasses, with over 4 times as many monthly actives as a year ago, and the number of people using voice commands is growing even faster as people use it to answer questions and control their glasses. This month, we fully rolled out live translations on Ray-Ban Meta AI glasses to all markets for English, French, Italian, and Spanish. Now, when you are speaking to someone in one of these languages, you'll hear what they say in your preferred language through the glasses in real time. Now to the second driver of our revenue performance, increasing monetization efficiency. The first part of this work is optimizing the level of ads within organic engagement. We continue to optimize ad supply across each service to better deliver ads at the time and place they are most relevant to people. We are also starting to introduce ads on unmonetized services like Threads, which we opened up to all eligible advertisers this month to reach people in over 30 different markets to start, including the US. As we do for any newly monetized surface, we expect to gradually ramp ad supply as we optimize the ad formats and ensure they feel native to the app. We don't expect Threads to be a meaningful driver of overall impression or revenue growth in 2025. The second part of increasing monetization efficiency is improving marketing performance. We're continuing to improve our ad systems by developing new modeling technologies to more efficiently predict the right ad to show. In Q1, we introduced our new Generative Ads Recommendation Model, or GEM, for ads ranking. This model uses a new architecture we developed that is twice as efficient at improving ad performance for a given amount of data and compute. This efficiency gain enabled us to significantly scale up the amount of compute we use for model training, with GEM trained on thousands of GPUs, our largest cluster for ads training to date. We began testing the new model for ads recommendations on Facebook Reels earlier this year and have seen up to a 5% increase in ad conversions. We're now rolling it out to additional surfaces across our apps. On the ads product side, we're seeing continued momentum with our Advantage Plus suite of AI-powered solutions. We've been encouraged by the initial tests of our streamlined campaign creation flow for sales, app, and lead campaigns, which starts with Advantage Plus turned on from the beginning for advertisers. In April, we rolled this out to more advertisers and expect to complete the global rollout later this year. We're also seeing strong adoption of Advantage Plus Creative. This week, we are broadening access of video expansion to Facebook Reels for all eligible advertisers, enabling them to automatically adjust the aspect ratio of their existing videos by generating new pixels in each frame to optimize their ads for full screen surfaces. We also rolled out image generation to all eligible advertisers, and this quarter, we plan to continue testing a new virtual try-on feature that uses GenAI to place clothing on virtual models, helping customers visualize how an item may look and fit. Last, we continue to evolve our ads platform to drive results that are optimized for each business's objectives and the way they measure value. One example of this is our incremental attribution feature, which enables advertisers to optimize for driving incremental conversions or conversions we believe would not have occurred without an ad being shown. We're seeing strong results in testing so far, with advertisers using incremental attribution in tests, seeing an average 46% lift in incremental conversions compared to their business as usual approach. We expect to make this available to all advertisers in the coming weeks. Next, I would like to discuss our approach to capital allocation. Our primary focus remains investing capital back into the business, with infrastructure and talent being our top priorities. Starting with headcount, our hiring continues to be targeted at technical roles within our company priorities. In the first quarter, the significant majority of the roughly 2,800 employees we added were to support our priorities of monetization, infrastructure, generative AI, regulation and compliance, and Reality Labs. On infrastructure, we have two primary focuses to meet the growing compute needs of our services and AI initiatives. The first way is by significantly scaling up our infrastructure footprint. Our CaPex growth this year is going toward both generative AI and core business needs, with the majority of overall CaPex supporting the core. We expect the significant infrastructure footprint we are building will not only help us meet the demands of our business in the near term, but also provide us an advantage in the quality and scale of AI services we can deliver. We continue to build this capacity in a way that grants us maximum flexibility in how and when we deploy it to ensure we have the agility to react to how the technology and industry develop in the coming years. The second way we're meeting our compute needs is by increasing the efficiency of our workloads. In fact, many of the innovations coming out of our ranking work are focused on increasing the efficiency of our systems. This emphasis on efficiency is helping us deliver consistently strong returns from our core AI initiatives. For example, we shared on the Q3 2024 call that improvements to our AI-driven feed and video recommendations drove a roughly 8% lift in time spent on Facebook and a 6% lift on Instagram over the first 9 months of last year. Since then, we've been able to deliver similar gains in just 6 months' time, with improvements to our AI recommendations delivering 7% and 6% time spent gains on Facebook and Instagram, respectively. Before moving to our financial guidance, I want to acknowledge the dynamic macro environment and note that our range reflects the potential for a wider set of outcomes. We continue to feel good about the fundamental drivers of revenue growth and believe the past work we've done to streamline our operations and cost profile puts us in a strong position to navigate a variety of outcomes. Moving to our financial outlook. We expect second quarter 2025 total revenue to be in the range of $42.5 to $45.5 billion. Our guidance assumes foreign currency is an approximately 1% tailwind to year-over-year total revenue growth based on current exchange rates. Turning now to the expense outlook. We expect full year 2025 total expenses to be in the range of $113 to $118 billion, lowered from our prior outlook of $114 to $119 billion. Turning now to the CaPex outlook. We anticipate our full year 2025 capital expenditures, including principal payments on finance leases, will be in the range of $64 to $72 billion, increased from our prior outlook of $60 to $65 billion. This updated outlook reflects additional data center investments to support our AI efforts, as well as an increase in the expected cost of infrastructure hardware. The majority of our CaPex in 2025 will continue to be directed to our core business. On to tax. Absent any changes to our tax landscape, we expect our full year 2025 tax rate to be in the range of 12 to 15%. In addition, we continue to monitor an active regulatory landscape, including legal and regulatory headwinds in the EU and the US that could significantly impact our business and our financial results. The European Commission recently announced its decision that our subscription for no ads model is not compliant with the DMA. Based on feedback from the European Commission in connection with the DMA, we expect we will need to make some modifications to our model, which could result in a materially worse user experience for European users and a significant impact to our European business and revenue as early as the third quarter of 2025. We will appeal the Commission's DMA decision, but any modifications to our model may be imposed before or during the appeal process. In closing, this was another solid quarter for our business. We believe the investments we're making across our company priorities will position us well in the coming years to continue delivering engaging services for our community, compelling results for advertisers, and strong business performance. With that, Krista, let's open up the call for questions.
Thank you. We will now open the lines for a question and answer session. To ask a question, please press star 1 on your touch-tone phone. To withdraw your question, again, press star 1. Please limit yourself to one question. Please pick up your handset before asking your question to ensure clarity. If you are streaming today's call, please mute your computer speakers. And your first question comes from the line of Brian Nowak with Morgan Stanley. Please go ahead.
Great. Thanks for taking my questions. I have two. The first one's on Llama. Mark, the LLM landscape continues to sort of evolve and be somewhat competitive. Can you sort of talk us through some of the key areas of advancement you are most focused on and excited about as we sort of think about Behemoth and next versions of Llama to come? And then the second one on Meta AI, almost 1 billion users globally. Any help on sort of how you're seeing US traction there and the types of recurring user behaviors that you're seeing in the early Meta AI use cases? Thanks.
Sure. I can talk about the LLMs. On the Meta AI usage, I'm not sure if we have more stats to share on that now. Yeah, I mean, I'll defer to Susan on if there's anything that we're ready on that. On the LLM, yeah, there's a lot of progress being made in a lot of different dimensions, and the reason why we want to build this out is one is that we think it's important that for kind of how critical this is for our business that we sort of have control of our own destiny and are not depending on another company for something so critical. But two, we want to make sure that we can shape the development to be optimized for our infrastructure and the use cases that we want. So to that end, Llama 4, the shape of the model with 17 billion parameters per expert was designed specifically for the infrastructure that we have in order to provide low latency experience to be voice optimized. One of the key things, if you're having a voice conversation with AI, is it needs to be low latency. So that way, when you're having a conversation with it, there's no large gap between when you stop speaking and it starts. So everything from the shape of the model to the research that we're doing to the techniques that go into it are kind of fit into that. Similarly, another thing that we focused on was context window length. And, in some of our models, we have we're industry leading on context window length. And part of the reason why we think that that's important is because we're very focused on providing a personalized experience. And there are different ways that you can put personalization context into an LLM, but one of the ways to do it is to include some of that context in the context window. And having a long context window that can incorporate a lot of the background that a person has shared across our apps is one way to do that. So that's like, it kind of is giving you a flavor of the products that we're trying to build, and then some specific technical architecture decisions and research prioritization that we basically have made in order to deliver the specific experience that we're going for. I could go on and add a lot more. The reason, I think it's also very important to deliver big models like Behemoth, not because we're going to end up serving them in production, but because of the technique of distilling from larger models. right? The Llama 4 models that we've published so far, and the ones that we're using internally, and some of the ones that we'll build in the future, are basically distilled from the behemoth model in order to get the 95% of the intelligence of the large model in a form factor that is much lower latency and much more efficient. So these things are all very important. Obviously, we wouldn't be able to do that kind of distillation from other closed models. So that kind of gives you a flavor for how we're thinking about the development of this, and then of course the models and the infrastructure that we're building out power all of the opportunities that I mentioned before.
Brian, I'm happy to answer your second question about Meta AI. The top use case right now for Meta AI from a query perspective is really around information gathering, as people are using it to search for and understand and analyze information, followed by social interactions from, ranging from casual chatting to more in-depth discussion or debate. We also see people use it for writing assistance, interacting with visual content, seeking help. And we see people engage with Meta AI from several different entry points. WhatsApp continues to see the strongest Meta AI usage across our family of apps. Most of that WhatsApp engagement is in one-on-one threads, followed by Facebook, which is the second largest driver of Meta AI engagement, where we're seeing strong engagement from our Feed Deep Dives integration that lets people ask Meta AI questions about the content that's recommended to them. And we're obviously excited about the launch of the Meta AI standalone app.
Your next question comes from the line of Eric Sheridan with Goldman Sachs. Please go ahead.
Thanks so much for taking the question. Maybe following up on Brian's question and coming at it from a different angle, and appreciate the color on the use cases you're seeing today for Meta AI. How would you suspect those use cases evolve with a standalone app? Can you bring us into a little bit the decision process to do a standalone app, what that might change in terms of utility, frequency, or scale relative to what you see inside family of apps today, and how you think about positioning Meta AI as a standalone app against the competitive landscape today of other standalone sort of consumer AI apps? Thank you.
Yeah, I can talk about that. We're going to focus on both integrating it into our family of apps in more ways and building a standalone experience. I think some people want faster access to it, or a more built out feature set than you can build into an app like WhatsApp. So the standalone app will be valuable for that. I also think that the standalone app is going to be particularly important in the United States, because WhatsApp, as Susan said, is the largest surface that people use Meta AI in, which makes sense. If you want to text an AI, having that be closely integrated and a good experience in the messaging app that you use makes a lot of sense. But while we have more than 100 million people use WhatsApp in the United States, we're clearly not the primary messaging app in the United States at this point. iMessage is. We hope to become the leader over time, but we're in a different position there than we are in most of the rest of the world on WhatsApp. So I think that the Meta AI app as a standalone is going to be particularly important in the United States to establishing leadership in as the main personal AI that people use. But we're going to keep on advancing the experiences across the board in all of these different areas.
Your next question comes from the line of Justin Post with Bank of America. Please go ahead.
Great, thank you. A couple questions just on the guide in the second quarter. There are reports of potential, supply issues in e-commerce. How you thought about that in the guide, and maybe how you're thinking about it for the back half. And then a bigger picture question. Your CaPex spend is now close to some hyperscalers with very big client bases. Just help us conceptualize the kind of ecosystem you're building with your CaPex. I know you gave a lot of help on the intro, but maybe the ROI works without direct enterprise spend to drive revenues. How you're thinking about that? Thank you.
Thanks, Justin. On the Q2 guide, there's uncertainty, obviously, in how the macro environment will evolve over time and how that could impact different segments of our business. Our Q2 revenue outlook aims to factor that in, and that's partly why the $3 billion range reflects the potential for a wider range of outcomes. Specifically, we have seen some reduced spend in the US from Asia-based e-commerce exporters, which we believe is in anticipation of the de minimis exemption going away on May 2nd. A portion of that spend has been redirected to other markets, but overall spend for those advertisers is below the levels prior to April. But our Q2 outlook, reflects the trends we're seeing so far in April, which have generally been healthy. So it's very early. Hard to know how things will play out over the quarter, and certainly harder to know that for the rest of the year. Your second question is about why we're investing more in CapEx. And, we really believe that our ability to build world-class infrastructure gives us a meaningful advantage in both developing the leading AI technology and services over the coming years. And there are a lot of opportunities also for us to improve our core business by putting more compute against our ads and recommendation work. So even with the capacity that we're bringing online in 2025, we are having a hard time meeting the demand that teams have for compute resources across the company. So we are going to continually invest, meaningfully here across our infrastructure footprint, but we are also really looking to build this capacity in a way that gives us the maximum flexibility in how and when we deploy it over the coming years, so we can respond to how the market and technology develop.
Your next question comes from the line of Doug Anmuth with JP Morgan. Please go ahead.
Thanks for taking the questions. I just wanted to follow up on CapEx and infrastructure spending. Just on the higher range for CapEx, can you just help us understand how much of that is tied to the additional data center investments versus the increased hardware costs, and really what's driving those higher hardware costs? And then separately, there have been some articles suggesting that you've been looking to partner to share some of the costs of the AI infrastructure build out. Can you just help us understand your thought process there and some of the pros and cons of going alone versus partnering? Thanks.
Thanks, Doug. So our increased CapEx outlook, reflects both of those updates. The increased data center spend this year, as we have made some adjustments to flex our build strategy that will enable us to really stand up capacity more quickly, both in 25 and 26. We haven't broken down sort of the exact drivers. The higher costs we expect to incur for infrastructure hardware this year really comes from, suppliers who source from countries around the world. And there's just a lot of uncertainty around this given the ongoing trade discussions. And so that is both reflected in the wider range that we are giving. And we're also working on, on our end on mitigations by optimizing our supply chain. And our outlook is really trying to reflect our best understanding of the potential impact this year, across all of that uncertainty. On the second part of your question, we are, we're pleased to have partners investing alongside us and bringing Llama to market, like AWS and Azure, who are helping us host Llama. We're always looking for opportunities to continue deepening or expanding those partnerships, but we are funding the infrastructure that is being used to train Llama, and we don't have any expectation that that will change at this point.
Your next question comes from the line of Mark Shmulik with Bernstein. Please go ahead.
Yes, thanks for taking the questions. Mark, in your conversation last night with Satya, I think you both discussed a bit around, kind of the portion of code being written internally by AI. Kind of back to some of your previous comments around, this being the year where we might see AI kind of the place of a mid-level engineer. With the world evolving so quickly, can you share some places where you've seen strong traction there? And, are we progressing kind of faster, slower, or as you expected towards this milestone? And then, Susan, with the expense guidance coming down just a touch, how should we think about just the overall cadence of expected spending, really as it relates to kind of core business performance and the realities of the day-to-day world we're living in? Thank you.
I can talk about the coding agent work. I don't think that there's been any real change in our prediction for the timing of this. So I'd say it's basically still on track for something around a mid-level engineer kind of starting to become possible sometime this year, scaling into next year. So I'd expect that, by the middle to end of next year, AI coding agents are going to be doing a substantial part of AI research and development. So we're focused on that. Internally, we're also very focused on building AI agents or systems that can help run different experiments to increase recommendations across our other AI products, that like the ones that do recommendations across our feeds and things like that. So I think that if it works, should just accelerate our progress in those areas. That's the basic bet that we're making.
Your second question about our lowered expense outlook, really we are 4 months into the year. The lowered outlook reflects more refined forecasts, including updated expectations for both employee compensation, as well as some other non-headcount related operating expenses this year. And that's partially offset by higher expected infrastructure costs related to our increased CaPex outlook, as well as higher expected Reality Labs cost of goods sold. And we've maintained our $5 billion range, just given the more dynamic operating environment that we're in. And what I would say is, our investment posture today reflects, the significant opportunities that we see across each of the company and priorities that we're investing in this year. We will obviously continue evaluating depending on how macro conditions more broadly evolve. But we really feel like these are big strategic priorities for us and are critical for us to continue investing in. And in fact, I think one of the aims of our efficiency work over the last 2 years was to put us in a stronger financial position so that we can continue investing in key priorities through tougher financial cycles.
Your next question comes from the line of Ross Sandler with Barclays. Please go ahead.
Great. Mark, yesterday in one of your many kind of podcast or keynote presentations, you had mentioned that like a bunch of projects that your teams want to or aspire to do are kind of bottlenecked by the AI capacity, which Susan just talked about earlier, and that even some of the testing that the ad ranking team wants to run is just getting kind of delayed. So I guess looking out either this year, next year, whenever, when do you kind of see some of this constraint being eased back? And more broadly, we're kind of 3 years past the IDFA impact to your business. So where do you think we are in terms of just the overall improvements to the ad ranking system, the ROI that you guys are able to deliver, and like what inning are we in on that, in your opinion? Thank you very much.
I can take a shot at both of those, and Mark, you can obviously chime in. On the first question, the capacity landscape we are in is pretty dynamic, both in terms of the many moving parts in terms of us bringing capacity online, but also in terms of the demand from different product groups in our company, whether they are in the Gen AI teams or whether they're doing more of the core AI work around ranking and recommendations. So both the supply and demand, are quite fluid. And so we don't have a sort of fixed answer in terms of, when we expect that that we will sort of have enough supply to meet all demand. But that's something that we are working very hard to alleviate, and it's part of why we accelerated bringing more data center space online this year. And also, we're very focused on increasing the efficiency of our workloads over the course of the year. On your second question about, ads performance, ads ranking, we have invested for many years and continue to invest in driving ad performance improvements. Year-over-year conversion growth remains strong. And in fact, we continue to see conversions grow at a faster rate than ad impressions in Q1, so reflecting increased conversion rates. And, ads ranking and modeling improvements are a big driver of overall performance gains. We have a lot of innovations in model architecture in both the ads retrieval and ranking stages of the ads delivery process to serve more relevant ads to people. We talked about the introduction of the new GEM ads recommendation model in Q1. And we have talked about some of the prior model architecture improvements like Lattice and Andromeda in past quarters. For us, we really, believe first and foremost that advertising is a relative performance game. That's especially important for us because the vast majority of our business is direct response advertising. So we feel good about how the prior investments are paying off, and we continue to invest in a lot of different work to constantly improve our ads ranking and recommendations performance.
Your next question comes from the line of Kenneth Grabowski with Wells Fargo. Please go ahead.
Thank you so much. Two for me, please. First, maybe Mark, how should we think about the timing of AI capabilities necessary to drive WhatsApp for Business adoption in higher labor cost labor markets? What is Meta doing to accelerate that adoption? And do you see this as mostly incremental to SME ad spend that you're already capturing? And then for Susan, one please. What does the revised CapEx outlook for this year for 25 mean about future years? Does it mean anything? Or you talked about this being an acceleration in your revised outlook statement. Should we think about this as a new starting point to think about 26 and beyond, or should we just start fresh in 26 and think about the needs and capacity at that point? Thank you.
I'm happy to take. I'll go ahead and take both of those, and Mark, you should feel free to chime in wherever you would like. So Mark talked a little bit about our general vision that every business will soon, have an AI that is an expert on their business for their customers to talk to, in the same way that today they've got email and websites, social media presences, etc. We are currently testing business AIs with a limited set of businesses in the US and a few additional countries on WhatsApp Messenger and on ads on Facebook and Instagram. We've been starting with small businesses and focusing first on helping them sell their goods and services with business AIs. But ultimately, we are working on tools to support businesses at every stage of the customer funnel, from lead generation to order management and customer service. And a core area that we're addressing right now is really the ability for businesses to customize and control the agent to achieve the outcome that they want. So we've launched a new agent management experience and dashboard that makes it easier for businesses to train their AI based on existing information on their website or WhatsApp profile or their Instagram and Facebook pages. And we're starting with the ability for businesses to activate AI in their chats with customers. We are also testing business AIs on Facebook and Instagram ads that you can ask about product and return policies or assist you in making a purchase within our in-app browser. So again, the ultimate vision is to build an experience that serves customers across all of these different services and apps. No matter where you engage with the business AI, it should be one agent that recalls your history and your preferences. And we're hearing encouraging feedback, particularly that adopting these AIs are saving the businesses that we're testing with a lot of time and helping to determine which conversations make sense for them to spend more time on. And then your second question, right, was about 2026 CapEx. Infrastructure, as I alluded to earlier, just is a very dynamic planning area, given the continued advances in AI. And also for us, the fact that we continue to find a lot of good use cases to put capacity toward in our core AI ranking and recommendations work. So I would say it's too early to discuss plans beyond 2025.
Your next question comes from the line of Youssef Squali with Truist Securities. Please go ahead.
Great. Thank you guys for taking the question. So Mark, in a world where we now have maybe 5 to 10 chatbots, including Meta AI on our smartphones doing virtually the same thing, do you think this is a market much like search where the winner takes most, or is it likely to be much more fragmented? But in either case, what would you say are the top 2 or 3 competitive advantages of Meta AI? And then Susan, on the EU decision in connection with the DMA, what kind of modifications will you need to make to the apps? And can you maybe just help us gauge the potential financial fallout, understanding that it may still obviously be too early? Thank you.
Yeah, on Meta AI, I mean, I think that there are going to be a number of different agents that people use, just like people use different apps for different things. Um, I'm not sure that people are going to use multiple agents for the same exact things, but I'd imagine that something that is more focused on kind of enterprise productivity might be different from something that is somewhat more optimized for personal productivity, and that might be somewhat different from something that is optimized um, for entertainment and social connectivity. So I think that there will be different experiences. Um, One of the trends that I think we're starting to see now is personalization across these. Right now, if the experience is unpersonalized, then you can kind of just go to different apps and get, you know, reasonably similar answers to different questions. But once an AI starts getting to know you and what you care about and context and can build up memory from the conversations that you've had with it over time, I think that will start to become somewhat more of a differentiator. So that's one thing that we think will matter. And then, of course, there's all the different modalities, being able to not just answer questions about in text, but being able to do voice and multimodal and be able to produce images and videos and understand all those things and have good conversations about that, I think is going to be important overall. So, um, yeah, I mean, I think Meta AI is well positioned, but we have a lot of work to do in order to make it the leading personal AI.
And Youssef, on your second question, it is really too early to speak about what those changes could be because we are in the process of engaging with the European Commission. I think maybe the most useful sort of metric I could give you is just that our advertising revenue in the European Economic Area and Switzerland, which would be the geographies impacted here, was 16% of our worldwide total revenue in 2024. Again, we are continuing to engage actively with the European Commission further on this, so we hope to have more clarity by next quarter's call.
Krista, we have time for one last question.
Your last question comes from the line of Mark Mahaney with Evercore ISI. Please go ahead.
Thanks. I'll just throw in two. I think you called out the China-based retailers as one sort of potentially soft advertising vertical. Anything else you'd call out? And I would just suggest autos. Was that an area of any softness? And then on the Reality Labs and on the losses associated with Reality Labs, they've been very consistent, whatever, $4 billion a quarter for quite some time. Is there light at the end of the tunnel? Is there reason to think? Is there a factor that would occur that would cause those losses to come down? And when would that be? But maybe more importantly, what is going to cause those losses to come down? Thank you very much.
Mark, let me take your first question about other verticals. We generally saw healthy growth in most verticals in Q1. We did see some weakness in gaming and politics. So year-over-year growth in gaming was negative in Q1 as we lapped a period of strong spend from China-based advertisers that were promoting a larger volume of game titles in Q1 of 2024. And then year-over-year growth in the government and politics vertical dropped sharply, as expected, with the conclusion of U.S. elections, but that continues to just be a very small vertical overall. And then your second question on Reality Labs.
Reality Labs one. I mean, we're basically focused on doing the work more efficiently, but as the AI glasses have really taken off, I've talked about this on a number of calls. There are more investments that I think makes sense to make around making sure that we can distribute this and grow it very quickly. I mean, if you look at some of the leading consumer electronics products of other categories, by the time they get to their third generation, they're often selling 10 million units and scaling from there. And I'm not sure if we're going to do exactly that, but I think that that's like the ballpark of the opportunity that we have, and that's something that I think we're kind of focused on scaling to that, and then scaling beyond that for the generations after that. So I think some of the the effort that we're doing is we're going to get more efficient in some parts of the work that we do. But then as a bunch of the products start to hit and start to grow even bigger than and the number that I just said is just sort of like the sort of a near term milestone, then then I think we'll continue scaling in terms of distribution, and then at some point, just like the other products that we build out, we will feel like we're at a sufficient scale that we're going to primarily focus on making sure that we're monetizing and building an efficient business around it. But that's kind of where we're at on it. We're definitely focused on doing the work more efficiently, but also very optimistic about what we're seeing in the results, especially on the AI glasses side.
Great. Thank you, everyone, for joining us today. Excuse me. And we look forward to speaking to you again soon.
All right, guys. So that is it for today. We got the Meta earnings call. It's now over. Meta, slightly negative reaction to the earnings call. Came down to 565. Bounced right off of it. Now we're kind of moving back up towards the highs of the day. We'll see what happens, guys. Remember, tomorrow we got jobless claims, unemployment going live at 8:30 Eastern Standard Time. We have ISM. I believe it's ISM services, or is it manufacturing? It is ISM manufacturing and construction spending at 10 a.m. Jobless claims at 8:30, suspected at 225,000, and this is leading into payrolls on Friday. Be ready. Apple, Amazon tomorrow. Hit the subscribe button, hit the notification bell. We appreciate the love. Thanks so much, guys. And yeah, we're going to go ahead and cut out of here. Y'all be safe. I love you all. Again, if you want to check out TopStep, learn to day trade in a structured environment. Put in a, they give you a 50K demo. They test your skill with it. If you pass the test, they fund you. You fail, you lose. The base one's $50. The middle one's $100. It's not the end of the world. Great way to learn. If you pass it, you get a 90% split, similar to funding your own account. If you fail, it's much less. And most day traders lose, and so it's a great way to learn. And if you pass it, you can then make enough and withdraw and fund your own account if you're good enough. But if you're not, like most traders, you lose $50 per account. It's not the end of the world. It's a great way to learn. Great way to learn. If you want to check it out, they are an affiliate of mine. I'm biased, of course, because I get paid by them, but genuinely useful for new traders. I'm always honest about it. If you want to check it out, here's the link. Great way to help support the channel. Understand all this stuff on the screen. And, hey, I love you all. I'll be back tomorrow bright and early in the morning. I'll see you guys later. Y'all be good.